How does a man earn $500,000 in a single year, live in a mansion, drive a luxury SUV, and pay exactly $0 in income tax? Most people call that cheating. The IRS and the CRA call it depreciation. Today, I'm going to show you the paper loss math that billionaires use to stay rich while the middle class stays taxed. If you're waiting for a refund check every April, you aren't winning. You're just giving the government an interest-free loan on your life. Let's look at the phantom math that turns a massive profit into a legal loss. Meet Chris. Chris is a successful doctor. He earns $300,000 a year. He works 60 hours a week. At the end of the year, the government takes nearly $120,000 in taxes. Chris is successful, but he's on a treadmill. Every time he earns more, they take more. Now meet Jordan. Jordan also earns $300,000. But Jordan doesn't have a job. Jordan owns a small portfolio of short-term rentals and a consulting business. Jordan spent $100,000 this year on a heavy luxury SUV and new equipment for his properties. Chris looked at Jordan's new truck and said, "You're wasting money." Jordan just smiled and said, "I'm not buying a truck. I'm buying a tax shield." Let's look at the sober math. Chris can't see because he's too busy working. Jordan's truck weighs over 6,000 pounds. Under North American tax laws, Jordan can depreciate almost the entire cost of that truck in year one. That's an $80,000 paper loss. Then, Jordan uses cost segregation on his rental properties. Even though the houses went up in value, the government allows him to claim the wear and tear as a massive loss. Jordan still has the $300,000 in his bank account. But on paper, he only earned $70,000. Jordan pays tax on $70,000. Chris pays tax on $300,000. Jordan keeps $90,000 more than Chris for doing the exact same amount of work. Why doesn't your accountant tell you this? Because most accountants are historians. They tell you what happened after you lost the money. The government built these rules to encourage investing over working. They want you to be like Chris. Chris is predictable. Chris is easy to tax. The paper loss isn't a loophole. It's a reward for the people who own the assets that run the economy. While Chris is trading his time for money, Jordan is trading his debt for freedom. The lesson? You don't get rich by earning more. You get rich by owning more of what you earn. If you're still filing a standard tax return and hoping for a refund, you're playing a game that was rigged against you from day one. If you want the asset list Jordan used to shield his income, or the 6,000-pound vehicle list that qualifies for the immediate write-off, you need to be in the lab. Stop playing the game with a blindfold on. Subscribe to The Wealth Architect. I'll see you in the next breakdown.